Accounting Standard 4 Contingencies and Events Occurring After Balance Sheet Date. So in this section, we go through events after balance sheet dates, events that are adjusting and non-adjusting, events of specific nature, going concern, or any problems which we encounter. So accounting standard, events occurring after balance sheet date. This is a mandatory standard. So before going into this section, we will see what we go through in this section, which is contingent loss and contingent gains. Events occurring after balance sheet date, which is adjusting events and non-adjusting events. Disclosures in terms of adjustments required to assets and liabilities, events occurring after balance sheet date, dividend proposals, or events of catastrophes. So we'll just briefly explain each of this in this section. So accounting standard. So this is a mandatory accounting standard. From this standard, contingencies are moved under accounting standard 29, provisions, contingency liabilities, and contingency assets. So for most reference, it is events occurring after balance sheet date. That is what is prescribed by this standard. Nonetheless, we will find explanations on contingencies and events. Now let us see what are contingencies. Contingencies are events whose outcome, if known only on the occurrence of it, for example, a case in high court or a penalty proceeding, etc. So the outcome is not known on the until it occurs. So until it occurs, the outcome is not known. So such events are actually contingencies. Events occurring after balance sheet date are events that may occur after the balance sheet date and before the date on which financial statements are approved by the board of directors of a company or by the management director or the managing director of a partnership firm. Now, what are contingent loss and contingent gains? If it is reasonable to assume that a contingency will result in a loss to the enterprise, it is a must that adequate provisioning must be done for that loss to the enterprise. If there is insufficiency in presenting an evidence, suitable disclosures should be made to the effect in the financial statements or in the balance sheet. So a potential loss may also be reduced by a counterclaim, where the amount of provision is determined or taken into account for a possible recovery under claim, where the measurability is aptly under existence with no significant uncertainty. So this one is contingent loss. So it's reasonable to assume that a contingency will result in a loss, and it's a must that adequate provisioning must be done for the loss to the enterprise. Sometimes it may so happen that a potential loss may also be reduced by a counterclaim. So these are the points which comes in contingent loss. Now, what are contingent gains? Contingent gains are not recognized. When realization of such gains are certainly certain, it ceases to remain as a contingent gain, and accounting for gain is made appropriate in the financial statements or in the balance sheet. So contingent gains are not recognized because when realization of such gains are certain, it stops to remain as a contingent gain. So that is the reason. Next, we'll see what is events occurring after balance sheet date. So these events occur after balance sheet date, but on or before the day in which financial statements are approved by the board of directors of the company or by the managing director of a partnership firm. So such events are events occurring after balance sheet date. There are two types of events. One is adjusting event and one is non-adjusting event. So events occurring after balance sheet date falls into two main categories, adjusting and non-adjusting. Adjusting events have conditions that may exist in the balance sheet. So it provides additional information on events that occur in the balance sheet day. The additional events materially affects whatever is conditionally given in the balance sheet. There exists no conditions for non-adjusting events. So fundamentally, adjusting events have conditions that may exist in the balance sheet date. So if something is supposed to occur, what are the conditions which they have to be taken care of? That is already mentioned in the balance sheet. For non-adjusting events, there exist no conditions and hence no requirement of a disclosure in the balance sheet. If it is absolutely required, make disclosures on the auditor's report and not on the balance sheet. So that is how we actually adjust. Now, the adjustments are required to add assets and liabilities for events. So even before we take that, there are some disclosure requirements now what we go through. So adjustments are required to assets and liabilities for events that occur after the balance sheet date that provide additional information relating to conditions that may exist in balance sheet date. Otherwise, it is not required. Now, what are the disclosure specifics in this case? Events occurring after balance sheet date, when in particular there is a change in amount, needs further disclosure. So whenever there is a change in amount because of this adjusting events or non-adjusting events or events that occur after balance sheet date, if there is a change in amount, that has to be disclosed. Events such as dividend proposals that take place after balance sheet are also reflected of financial statements and is a statutory requirement. Events that indicate whether a firm ceases to exist due to a major fire in a production plant is indicative of whether the firm or enterprise ceases to be a going concern, may indicate considerations whether inclusion of fundamental assumption of a going concern is proper or not.